We will start the morning call. Asian markets are down sharply this morning. Across the board, we are seeing Asian indices are down by around 2 to 3%. This is mainly because oil prices have increased by 8% and are touching their highest level since 2008. Currently, they are at $125. This happened after the United States and European allies mulled a Russian oil import ban. While these delays in the potential return of Iranian crude to global markets fueled by tight supply fears. Uh, Russia holds around 12% of the world's oil supply and 17% of the world's natural gas. So expect elevated oil price if there is not a quick solution or the war doesn't stop immediately. Also, gold prices increased to almost $2,000, up about 1.5% today. I will now call the technical team to take it forward.
Yes, thank you, Jihan. Good morning, all of you. Today, the market is likely to open up on a gap down note. 15,800 level will be the opening level, probably we are expecting. If it's break that level, then 15,700 and 15,640 levels will be seen on the Nifty sides. Whereas on higher side, 16,000 will act as a strong resistance levels. As long as Nifty sustains below that level, the view will remain cautious to bearish itself. Avoid major long positions as long as Nifty sustains below 60,000 psychological mark. Coming towards the Bank Nifty, continuously we are witnessing a selling pressure on the Bank Nifty as well. For today intraday purpose, 34,000 will act as the immediate support level. If it's break that level on the closing basis, then the selling pressure is likely to be intensified, which might take a Bank Nifty towards 33,570 to 33,000 levels on the downside. Whereas on high side, 34,800, 35,000 levels would be the resistance levels on the Bank Nifty. Coming towards the Nifty Finance, for today intraday purpose, 15,640 is the first support level. Below that level, 15,450, 15,300 levels will be seen. Whereas on high side, 16,000 will be the first resistance zones. If it's clear that level, then only we can witness a small pullback rally, which might take a Nifty Finance towards 16,240 to 16,300 levels. The view will remain bearish only. Let the Nifty and the Bank Nifty settle down at the support levels. As of now, we are not initiating any buy call or sell call because the market is already opening with the huge gap downs. Let the market supports and clear, and once the trend will get clear on intraday basis, then we will initiate the calls accordingly. I think that's it from my end. I request Nirav to take a call forward.
Yeah, thank you, Swati. See, on the Nifty front, we are breaking the support of 16,000 levels. Now, this is a huge important support area. And if 16,000 is broken below on a closing basis, it opens up the downside. The highest put base is around the 16,000 put strike, and that is going to be liquidated. And, going forward, it can go toward the 15,500 or 15,000 level. So, definitely there is a good 500 point downside after 16,000 is broken. So look out for the same close out long positions if we open below 16,000 levels. And on a closing basis also is very important. If 16,000 is broken, making short positions or hedging your long positions immediately would be a better option going forward. The VIX continues to be high and FIs continue to be sellers. Open interest have continuously moved up. The open interest for Nifty has gone up about 50% in the last 5-6 days, and that is the area of concern. So definitely some selling going to be seen going forward. From the stock specific front, everything is going to be red. Only ONGC seems to be the stock which can probably witness some buying going forward. So look out for the same. And ITC has seen some short covering. So this is one stock which can hold up in the markets where we are hugely gapped down. That's it from my side. I'd like to ask the fundamental team to take over.
Yeah. So on the auto sector, there are a couple of headwinds. One is that a couple of days back, MORTH, which is the Ministry of Road Transport and Highways, has issued draft notification that the insurance premium for motor vehicles, the third-party insurance prices will be hiked by between 1 to 2% across the board for two-wheelers and commercial vehicles. While in case of passenger vehicles, the premium increased is negligible. So this will be somewhat negative for the two-wheeler companies and both Tata Motor as well as Ashok Leyland. Also, for the auto sector as a whole, there are talks that the ongoing war between Russia and Ukraine will have adverse impact on chip supplies, which were already in shortage. So two components which are used in semiconductor chips, palladium and neon, are predominantly supplied by Russia and Ukraine. Almost 40% of world's palladium supplies is done by Russia, and 70% of neon is supplied by Ukraine. So expect the situation to worsen, and so in coming months, don't expect any particular positive news on the auto sector side. That's all from my side. Thank you.
Good morning, everyone. As we are seeing that the oil is heading up, this can have an impact on companies like Asian Paints. We are seeing that it has already seen a downgrade in Friday's session, and we expect that to continue because this can have an impact in future also. Coming from that, we attended a meeting with Supriya Life Science on Friday. The management sounded confident and hopeful for the future. The company is into APIs mainly, and we have seen that they had a good listing, but after that, after the Q3 results, the stock came down mainly because the margins have come down to 35% from their average 40% expectation. The management is hopeful that because this has happened because of the volatility and the seasonality impact, and this would be rectified, and for the full year they're expecting 38 to 40 percent margins to be remained, and company likely to grow to 20% CAGR in next few years. They don't have any impact of this geopolitical tension going on, as they have very little sales, hardly anything from Russia and Ukraine. So this geopolitical tension at least doesn't have any much impact currently. That is something to look forward if that escalates to other raw materials and other things. Overall, we came positive and remain positive on the company from medium to long term point of view. Just another one update that from today, Cadila Healthcare's name and the ticker has changed to Zydus Life Sciences. That's all from me. Thank you.
Good morning, everyone. We met the management of Dollar Industries, wherein management indicates FY22 sales growth is expected to be around 20 to 25%. With Jan being impacted due to Omicron, management indicates there was a pickup in February, and they don't expect any degrowth on a year-on-year basis in Q4. With rising cotton prices, management plans for another price hike of 5% by March end or April 1st week. Over the long term, they target to reach rupees 2,000 crore revenue in FY25 with EBITDA margin of 17.5 to 18.5%. Higher volume price hike, change in product mix will with the high premium products are the levers to increase the margins ahead, and they also plan to reduce working capital days to around 110 days by FY25 from a current of 184 days in FY21. Stock is trading at a PE of 16.6 times FY23 EPS. Thank you.
Thank you very much for attending. That's all from our side. Have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.